Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday, the 28th of December, 2024. We're publishing our gold and silver weekly update for the week ending the 27th of December. As stated last week, we did not expect much excitement in the financial markets unless there was a major geopolitical event. It transpires that the last 7 days have been rather uneventful. As we move into the new year, can we expect the same? Well, let's take a look. Now, before we look at the markets, a reminder we've set up a sister channel entitled Finances Do Matter. We shall be changing much about that channel from the new year, and so if you haven't subscribed, please do so by following the link in both the description box and comments section below. Let's get back to the financials. Gold fell, wait for it, $1 last week, falling from $2,624 to $2,623. It has been as high as $2,662 and as low as $2,609. The spread between gold's high and low was $53, and we did predict last week that gold would trade between $2,575 and $2,675, which it did most comfortably. In sterling terms, gold rose £2, closing at £2,092, and in euros it fell €1, closing at €2,520. Silver fell 14 cents, moving from $29.55 to $29.41, having hit a high of $30.39 and a low of $29.37. So it closed just marginally above its low. The difference between its high and low was just $1.02. Now, last week we predicted silver would trade between $28.25 and $31, which it did comfortably once again. In sterling terms, silver's down 11 pence at £23.47, and in euros it closed down 0.14 euros at 28.31 euros. Gold to silver ratio rose marginally from 88.8 to 1 to 89.2 to 1. Bitcoin is currently standing at $94,546, and that's down just $300 on the week. Equities were marginally higher, though US indices fell by around 1% on Friday, but nevertheless for the week they were higher. Dow Jones up 152 points at 42,992. The S&P 500 up 40 points at 5970. And the Nasdaq Composite up 150 points at 19,722. Even the good old FTSE Index was up 65 points at 8,149. Oils are marginally higher, with Brent crude up $1.23 at $74.17, and WTI crude up $1.14 at $70.60. Dollar index is also up 0.4 at 108. Economic data coming out of the US last week was pretty limited and uninspiring, though it was worth noting that consumer confidence figures were down in December by 8 points compared with November's figures. On Thursday, initial jobless claims figures fell for the week by just 1,000. We're not expecting much excitement this coming week either, with ISM manufacturing the only item of noteworthiness being announced on Friday, with little change expected in December compared with November. So, once again, we're expecting a pretty flat week, unless something happens geopolitical. James Hyszczyk of FX Empire encapsulated the position on gold in the following way, quote, "Near-term resistance for gold stands at $2,629, with major resistance at $2,665, aligning with the 50-day moving average. The dollar index extended gains for the fourth week, pushing gold lower as 10-year yields hit 4.641%, a 7-month high. Trump's tariffs and trade policies could boost gold's safe haven demand as geopolitical risks linger into 2025, and gold's 28% rally in 2024 faces headwinds, but analysts see central bank buying driving prices towards $3,000 by the middle of 2025, unquote. Well, we said last week that gold's future, at least in the first quarter of 2025, will be determined by inflation, jobs data, and any shift in Fed sentiment. There does certainly appear to be technical support, strong support, for gold at $2,536 and strong resistance at $2,665. Silver has some good news in that although 2024 production rose by 2%, demand jumped 7%, driving approximately a 182 million ounce supply deficit, the fourth consecutive shortfall. It does appear that silver has strong support at $28.40 and strong resistance at $30.50. Now, we have a few opposing forces regarding precious metals and interest rates over the next few months. The Fed has signaled that 2025 is likely to see just 2 rate reductions rather than a previously predicted 4. The ECB has just come out stating that rate cuts will be slower than expected due to an uptick in inflation. Trump's threat of tariffs could add to that inflation if he does actually carry them out. On the other hand, if Trump can genuinely reduce oil prices by drill, baby, drill, that will reduce inflation, at least for the United States. The dollar is remaining strong against other currencies and is likely to hold that position for some time, thereby dampening any rise in gold and silver prices. Also, we have to bear in mind that any agreement between Russia and Ukraine and Israel and Palestine will reduce the war premium in precious metal prices by anything from $100 to $200 an ounce in gold and $1 to $2 per ounce in silver. Now, we stated last week that, quote, unless something spectacular happens between now and at least the second week of January, gold is likely to be range-bound between $2,500 and $2,700, and silver between $28 and $32. And we still hold to that position, though we're not really expecting those upper levels to be reached. So where do we forecast gold and silver this coming week? Well, we predict gold will trade between $2,575 and $2,675, with $2,550 and $2,700 as outliers. Exactly the same prediction we gave last week. Silver, we expect to trade between $28.25 and $30.75, with $28 to $31 as outliers. Overall, a little lower than last week. Well, what are your thoughts? Please do share them. Thank you for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and subscribe there. And all that remains, unless we produce a video between now and the 1st of January, is that you have the remainder of your Christmas holidays to be pleasant, not overindulgent, hopefully, and that you have a most prosperous and happy New Year.